Hello ladies and gentlemen, it's Ronald again back here with another crypto video. I guess we'll try and keep it short, but you know, I try and keep it short every time, and I think I made an hour-long video recently, so I mean, take that with a grain of salt. Today we're going to be talking about bear markets and crypto winter, and we're going to touch on the idea of extended cycles and super cycles, which I think these things are, you know, the hard upside and the hard downside, and we kind of have to think about both ends. And obviously today, based on, you know, the title of the video, we're kind of going to be putting a bit more emphasis on, you know, the possibility of bear markets, what they've looked like in the past, what's driven them, and previous crypto winters, which is something I've just been thinking about lately, especially given some of the news that we've heard recently about, you know, exchange hacks and regulatory issues and laws in the United States and stuff like that. And I kind of got to thinking, what exactly brings about a prolonged bear market, a crypto winter and stuff like that? Because crypto winter, you know, if you know anything about it, let's talk about that right now. So a bear market, in the sense of like a traditional market, and what that means in the context of like stocks, is something like a 20% drop in the market for at least 2 months. And in Bitcoin, you know, that kind of definition, my initial impression was that shouldn't really apply. After all, 20% drops are pretty common with Bitcoin's price action. But once you add the added criteria of for at least 2 months, well, that's less common. That's less common, right? You see 30, 40 plus percent drops in Bitcoin's price, but to have that sustain consistently for 2 months or more, that's less common in a bull market, right? But then when you start seeing that kind of sustained drop for 2 months or more, then we're in officially a bear market. And then when that happens for years at a time, that's crypto winter. So basically a bear market is a significant sustained drop, and then crypto winter is when that drop is sustained for a very long time. Now, is there a hard cutoff for that? Not really. It's only happened a couple times before, and ultimately moving on from the bearish downside scenarios to the better scenarios, you know, you have those crypto winters that then lead into bull markets. Bull markets are essentially, you know, when the price goes up for an extended period of time. And as we've discussed in previous videos, you know, the market cycle tends to follow Bitcoin's halving cycles, right? So every 4 years or so, the rate at which new Bitcoin are mined is cut in half, right? And price action tends to follow these halving events. And what people have kind of observed is that when it comes to bull markets, there seems to be extending cycles, slowly extending cycles. The bull run tends to last a little bit longer. And there's these concepts that are really coming to the fore in this cycle that people are talking about. One is what I just mentioned, the extension of the bull market run, and then the idea of a super cycle. An extended cycle is literally just what it sounds like. It just goes on a bit longer. It gives you a longer time period to where you can reach a new all-time high. Whereas the concept of a super cycle is a little bit different. It's more based on two things. I think two things. One thing more concretely, the other thing kind of more as an inference. More concrete basis here is the way a super cycle is thought of in the commodities market. So in the 2000s, earlier, you know, at the start of this millennium, gold and silver and pretty much a lot of different commodities started to experience prolonged bull market cycles, like literally like a decade long, like literally years and years and years. The idea with like a Bitcoin super cycle has more to do with like a positive feedback loop. So as we see with Metcalfe's law, where the value of a network is directly proportional to, you know, n squared of the number of nodes in that network. As we get to a point where we have more and more people in the network and more access to a certain network. There's more retail on-ramps, institutional on-ramps, and even at this point, national level adoption. You can have this positive feedback loop where as more people get into Bitcoin or more people get into crypto in general, more people will see that and get in. And in the modern day, it used to be that in like 2009 or even 2012 or in 13 and even 2015, etc., it was difficult to get into crypto. Buying Bitcoin was actually, you kind of had to know a way to do it. Whereas today, you can just set up a Coinbase account and you're off to the races. It's not hard to buy Bitcoin these days. And as far as, the height of any bull market goes, we've never had this much access to Bitcoin, and we've never had this much mainstream adoption of Bitcoin. A lot of retail investors now hold cryptocurrency in their portfolio. And so as the price goes up this time, as we, if we climb to, 6-digit Bitcoin as a new all-time high, we might potentially expect to see that retail FOMO could trigger a super cycle. As more people get in, the more people will see this and be like, well, I need to get in. How do I get in? And it won't just be some esoteric thing now. You just make a Coinbase account and 5 minutes later you can buy as much Bitcoin as you want. And so, and it won't just be retail, right? We're having this whole new element of, institutional level FOMO. Banks are getting in. Banks, at this point, El Salvador has made it legal tender. Nations and could potentially start getting in. People, politicians are talking about how to buy Bitcoin and how their population should potentially look into getting Bitcoin as part of even retirement accounts. Cynthia Loomis is known for saying something like that. Americans could maybe look into putting crypto assets in their retirement accounts. That's kind of a big thing. And so if that feedback loop gives you massive increases in price, we could have a bull cycle or a bull run that goes for a much longer time to much higher highs. And that's kind of more the concrete basis for the idea of a super cycle. Now, I think my inference, just from kind of looking at the concepts, I think the idea of a super cycle is almost more of a reaction to the existence of crypto winter. So crypto winter being like, and we'll take a prolonged kind of look at previous crypto bear markets and crypto winters in a moment. But if you had a super cycle, the idea of a crypto winter is kind of thrown out. And I think people really, really want that. There's this huge specter that's hanging over your portfolio if crypto winter is a real possibility that could happen at any moment. Crypto winter isn't just like a bear market. It's not a 20% drop. Crypto winter historically has been things like 80, 90% drops. You've seen my portfolio, right? If you're at 50,000 and my portfolio is right where it is, and you see a crypto winter of a 90% drop, that money could go to 4,000, 5,000, right? That's a massive drop. I'd be left with significantly less money, significantly less. And at that point, the only financially sensible thing to do would be to, hold for 5 years minimum. And what if I need some extra cash in 5 years? Something unexpected happens. Then you're kind of screwed, right? Crypto winter in the short term, in the midterm, if you don't have a lot of, income in other assets, diversified in other assets, or just ongoing significant source of income, you might be thinking like that's a huge risk. That could be a real issue. So I think psychologically, the benefit of, the reason people are kind of gravitating towards this idea of a super cycle is because they don't want to see another crypto winter. Crypto winter is a scary concept. But it shouldn't be a scary concept, because if you truly have a very extended investment horizon of at least 5-10 years, this is not an issue at all. If anything, this means 5 to 10 years of massive 90% discounts, right? Say that Bitcoin goes from 69,000, the current all-time high, to 6,900, right? That's an amazing price for Bitcoin. You should buy as much as you can, because the next time you get to that all-time high, right? If you have multiple coins, you're easily 6 to 7 figures. you invest for 5 years and you have a crypto winter, 7 figures easy. It becomes easy. It's a couple years, but it's a huge gain. It's unbelievable levels of profit. So let's start using some concrete numbers and timelines here, right? So the first major extended bear market in the history of Bitcoin was in 2012. And you can kind of think of this as a time when a lot of hacks were occurring. And one thing that you'll see as a theme that carries over into all of these prolonged bear markets and crypto winters is that there's a narrative of some serious issues. So this first prolonged bear market in 2012, this went from January to July of 2012. And this is obviously in the first couple of years of Bitcoin. This is baby Bitcoin we're talking about. The prices are much smaller. This is a drawdown from $7.08 to $4.22 for a prolonged bear market of about 185 days, right? Depending on where you make the cutoff, right? About 185 days, about a 40% drawdown, right? So single-digit Bitcoin. It was a magical time. But basically what happened around this time is that a lot of the bigger exchanges at the time, none of which are really known about now, got hacked for significant amounts of money. The big defining event of this era was the hack of TradeHill, which was at the time the second largest Bitcoin exchange. Other significant hacks in this era were the Bitcoinica hack, where 18,000 BTC were stolen. Then we see the Linode hack, where 46,000 BTC were stolen. So these are big things that shook investor confidence. And they really, just shook out a lot of the weaker hands and people that didn't truly believe in Bitcoin. And I believe this type of development is really where the current culture of crypto comes from. I was talking with a friend of mine about, how people who are into cryptocurrency aren't just people who are like into stocks who just have some stocks, right? These are people who believe in cryptocurrency. They believe in Bitcoin. They believe in Bitcoin like it's like their religion, right? Where does that come from? Well, if there's going to be these massive bear markets and crypto winters and big faith-shaking events like massive exchange hacks where tens of thousands of Bitcoin can be taken immediately, who's going to be left? There's like this selection pressure, right? For the people that will remain in the market are the people who believe. They're the true believers. Over time, these massive downtrends for extended periods selected for people who tend to believe really strongly in what Bitcoin is trying to do, right? They don't just invest because they think price go up. That's become the culture recently, and I think at every years into any bull market, that tends to be the case. But we're always going to revert to the mean as long as there's these, the possibility of crypto winter. As long as this extended thing is a possibility, we'll eventually go from, just people who are YOLOing in, just aping all their life savings in, to people who are left standing, who believe in crypto. They're the ones that set the market floors during these bear markets. They're the ones that see 90% drawdowns and ape in harder, right? So that's the first bear market, and it was driven by hacks primarily. This is also the era where, the idea of Bitcoin being potentially a useful instrument for like illegal activities and like extortion and money laundering and stuff came out. There was an FBI report around during this bear market that once again helped mold the narrative of Bitcoin in a very negative direction. The next bear market, which one could potentially argue is maybe a continuation of the first bear market, with just a little bit of a significant, like a bull run, but potentially you can see it as almost like a dead cat bounce in this case, from August to December of 2012. So still 2012. This is why I said that, where maybe you can almost see this as one prolonged bear market with a bit of a bounce in between. Because ultimately, later on this same year, we started another prolonged bear market. Now this bear market was about 111 days, and it was about a 37% drawdown. So the peak price here was about $13, and the low was about $8. Now the argument for this being a separate bear market is because the low here is higher than the previous bear market's high. So it still stayed above where the lowest part, or where the highest part of that last bear market was, but it was so close temporally that you could kind of look at it one way or another. And so if you were to add these two together, you see almost a 300-day total in just the year 2012 of just prolonged bear markets. Now you can think of this next era, this next big bear market as being an era of lawsuits. If you first have hacks, then you have lawsuits. And in this case, once again, a lot of these lawsuits are kind of in reaction to the hacks, which is why I say I think mechanistically you can think of these as kind of two bear markets that are actually kind of one bear market where there was just a good period in between. Because really, everything that happened in the second bear market was very much related to the things that happened in the era of hacks. So these big lawsuits happened as a result of these hacks. The big lawsuit to speak of here is the lawsuit against Bitcoinica, right? So that exchange that we mentioned earlier, Bitcoinica was sued. And that's not the only thing that happened. Bitfloor, which is another exchange, about the fourth largest at the time, was also hacked once again. So this is why I say similar mechanism to that earlier bear market and is related, right? So another exchange gets hacked. And on top of that, the criminal element comes into play as well. It's actually a lot of really eerie similarities. Something called the Bitcoin Savings and Trust that was basically caught out for literally running a straight up Ponzi scheme, right? So there's the criminal element that's kind of realized during this era of lawsuits. The Bitcoinica fallout from the earlier bear market, and then there's yet another hack. So as you can see, there's this big overarching narrative that was built that kept the price kind of depressed for quite some time. 185 days is a pretty significant length of time there. Okay, so now let's talk about true crypto winter. There's been two of these major consecutive crypto winters that are more than just any simple bear market, and there's really no argument that they're anything other than true crypto winter. The first of these is from 2013 to 2015, and this is a big one, greater than an 80% drop for over 400 days, right? This is huge. 415 days and an 83% drop, with the price going from 1,149 to 197. You really need a lot of fortitude to hold through a drop like that. And this is another period with this same common theme that we've been discussing, where it's really a narrative-driven drop here. And you know, I've said that a couple times now, and the reason I emphasize that is because I don't know if you guys feel the same way, but going into looking at, you know, crypto winters and stuff, I kind of expected to see something more, you know, and I kind of was hoping to see something more, to be honest, because ultimately things like narrative are things that change all the time. I mean, we'll at the end of this video, we'll talk about more, you know, contemporary things that could change, you know, the tide of the bull market towards a crypto winter and stuff like that. But the types of things that brought on the bear markets and crypto winters, hacks, regulatory issues, lawsuits, things like that, they happen. They've happened recently, you know, and ultimately that just kind of makes me a little nervous, because it's like, well, which one of these is going to start that bear market trend that's going to actually stay bear market and freeze the market for a year plus at a time? Right, and really this is the common theme. Each of these big, long bear markets is all about a narrative that may have started with something like a hack or a lawsuit or something like that, but then ultimately was oftentimes perpetuated by the media, and, you know, articles from all these different sites more or less fudding constantly, saying, you know, crypto's dead, and, you know, the prices are down and they'll never move. The Ponzi scheme has finally revealed itself, stuff like that. So that seems to be why a lot of these crypto winters and stuff happen. Now, why did the 2013 to 2015 crypto winter happen? What set that off? Well, as you can imagine, something as big as this, as long as this, must have had something pretty significant to set it off. And that's more or less true. You could make the case that the 2013 event that kind of set this off was the whole you know, drama with Silk Road. For those of you who don't know what Silk Road was basically a black market drug marketplace, essentially, And I believe by the end there, they were actually getting into more than just drugs. I believe they started selling like weapons and stuff like that. But they were primarily a illicit drug marketplace on, the dark web that utilized Bitcoin for transactions, essentially. And it was so large and so successful that you could almost make the case that this is the first main large-scale adoption of cryptocurrency, which is, is a part of why this whole narrative persists even today, as far as cryptocurrency being something used for illicit purposes, and it's particularly useful for whatever. I think Charlie Munger recently said it's more used by extortionists and kidnappers and shit like that. But this is kind of the big event there. So the FBI cracked down on them, and a lot of people were exposed, and a lot of Bitcoin adoption was really set back, because ultimately that was a large-scale adoption of Bitcoin for nefarious purposes. And so that started the avalanche of FUD that kind of led towards, over a year of frozen low prices and an 83% drop that was sustained. And ultimately, like I was saying earlier, I mean, who would have the testicular fortitude to hold through all of that at times when everybody is saying that this is not only potentially like a Ponzi scheme type thing, but also potentially evil, almost ethically questionable. It's only the true believers that would make it through all of that. The people who form the price floor that persists even till today. These are the people who really, really believed in Bitcoin, even if it temporarily, or even potentially not temporarily, is suppressed and isn't making them any money. They believe in what it's going to do, and so they hold on to it anyway. It doesn't make any difference for them because they believe in the underlying asset and the use cases and the potential. So that's 2013 to 2015 crypto winter. And ultimately, the other interesting question when you're talking about these bear markets and crypto winters is so it's often somewhat easier to figure out what set them off, but what caused the reversal, I think, is the other question, right? Why did we come out of crypto winter? And frankly, I don't have a great answer for the 2013 to 2015 crypto winter. Why did we come out of it? It wasn't that popular sentiment was really all of a sudden bullish. There wasn't a clear transition from a bunch of negative articles to a bunch of positive articles. That didn't happen. In fact, when we saw the reversal starting to happen at that point, it was actually still very negative. It was very negative, honestly. People were still talking about things like the Mt. Gox issue, the hack there, and how there might have been an inside job. There's all kinds of FUD still going on. It was still a very negative time in terms of the news cycle for cryptocurrency. So that's something you'd still have to look into. It might have just been coincidence. Maybe there was just a little bit of a increase in the price that led to a domino effect that had gained enough momentum for the coin that it just kind of rode that into a new bull market. It's hard to say. And of course, the most recent crypto winter was from December 2017 all the way into 2019. And that's yet another really long bear market that just the price froze and went down and just didn't go up pretty much the entire time. There weren't any real bull runs hidden within that. And this is yet again another 80% type of drop. It's a really massive decrease, which once again just goes to show why would it be that there are so many evangelistic, almost religiously zealous people in the crypto community, because they're the ones that would have stuck through this massive bear market. Nobody else has the cojones to do it. Now, what happened in 2017? 2017 was an interesting time. Crypto, it had been years, approaching a decade since Bitcoin first came out. And in 2017, people were really trying to make some strides in the cryptocurrency world outside of Bitcoin. Ultimately, as a lot of people know, in 2017, that was the run where we had a crap ton of extra cryptocurrencies, new coins and tokens that were just proliferating. Bunch of shit coins, bunch of really, really worthless tokens that were just popping up that were many of them were scams, right? So this gave kind of a bad reputation to the entire asset class, really. People at that time were talking about like technology. People were trying to come up with new ideas, gimmicks, a lot of these, for, you know, what could add value to a new coin. They wanted all kinds of technology, but ultimately, I think this kind of reflected kind of the tulip mania kind of thing that happened in the past, where people were paying ridiculous amounts of money for tulips, right? And it just kind of over proliferated, and eventually people just got tired of that. People lost interest because there was just too much nonsense, valueless stuff in the crypto world. And ultimately, as value in the entire asset class dwindled, Bitcoin took a massive hit. And Bitcoin, as the leader of the market, the dominant part of the market cap, dragged everything down with it. But I think that drop kind of had a big deal to do with the altcoins, just people losing people's interest as well. Although Bitcoin really did kind of start going down before that, but it was trading sideways around the time when altcoin pump happened. And then as I think the altcoins came down, the whole market went down and just never came back up for a long time. And then of course that brings us to the modern bull cycle. So as you know, we're essentially in Q4 of year 4 right now of the current cycle. We talked about extending cycles and super cycles in the beginning of this, but you know, let's talk about what's going on now that could potentially relate to the next crypto winter or the next extended bear market. And scarily enough, there's a couple of things. So if you've been paying attention to United States legislation, right? They've been passing some laws that are kind of questionable. I've actually covered some of this in previous videos where they've more or less been moving to classify everybody as crypto brokers so that everybody gets taxed at a federal level for everything they do in the crypto space, because all of a sudden we're all brokers. And this is something that actually today, right? So December 8th, 2021, there's a bunch of crypto executives and stuff testifying before Congress. And one of the things that they did explicitly mention is that particular provision, the taxing changes around crypto and the way that essentially everyone involved in the marketplace would be taxed a great deal extra. And this would be a really dampening force on cryptocurrency in America, which is not to say that it would stop innovation everywhere all the time equally, because it'll just go to other countries. Germany, Brazil, Singapore, all these places have things like spot Bitcoin ETFs. Why is it that we, with the SEC, we only have futures-based Bitcoin ETF? This is capricious and arbitrary, right? This is stupid. And so there's a lot of issues that could potentially turn a narrative positive or negative depending on how the lawmaking process goes. Hillary Clinton was recently coming out. She was on MSNBC, I believe, and she wasn't even being asked about cryptocurrency. She brought up Bitcoin spontaneously, saying, hey, we have to do something about this because it could compete for the US dollar as the global reserve currency. And that by itself is not enough to be a large matter of concern. People have been talking these things constantly. But if any of these things, or a bunch of these things in combination, becomes part of a larger, truly negative narrative that actually catches hold, we could be in some more trouble. Now, part of the reason a lot of analysts are still very much bullish and predicting things like an extended cycle and a super cycle is because we have too many truly unprecedented bullish things going on. Not even the least of which is El Salvador adoption, right? Legal tender in a country. That's not even it. We have massive institutions, massive banks. BlackRock is dabbling in crypto now. They're the biggest asset manager in the world. Jefferies sold a chunk of its gold in favor of Bitcoin, saying that it's the new inflation hedge. Time Magazine now holds both Bitcoin and Ethereum on its balance sheet. MicroStrategy is buying like crazy Bitcoin, right? And now investment banks are also buying ETH and holding it on its balance sheets. Pretty much every bank is offering some form of crypto services. And there was a recent survey that said a majority of people are saying that they would switch to a bank that offers crypto services if theirs currently doesn't, because they're planning on starting to invest. There's too much bullish stuff going on right now to say that, any of these things in the near term would potentially cause a crypto winter. But none of this is a guarantee, because ultimately there are things that resemble previous crypto winter narratives that could always come back to bite us. Most recently, Bitmart and BadgerDAO are big exchanges that have been hacked for hundreds of millions of dollars. This is exactly the type of thing that caused previous extended bear markets and crypto winters. It's exactly the type of thing that, tanked the market and kept it down. Now, these two events that I just listed, the Bitmart hack, the BadgerDAO hack, for the moment, they don't seem to be, putting us into a bear market. We seem to be recovering from our most recent dip. But and in a way, people are a bit more educated now, and it's potentially more of a it doesn't have the same salience and the same effect that it did previously, because in the beginning, people would just sell out if they saw stuff like this happening. But what it did for me is it spurred me to put my coins into cold storage. I don't want to get my coins hacked. I meant to do this a while ago. I been meaning to, I wanted to, I just never got around to it. But I recently ordered my Ledger Nano X, and I'm going to do a review and an overview of the Ledger Nano X when I get it. We'll do an unboxing, we'll see how it works, see how it goes. But yeah, I'm putting my stuff into cold storage. You can protect your coins. There's no point in actually having your coins on an exchange if you don't plan on trading. And as people get more educated about these things, and they're more into things like self-custody, which is arguably a big part of the culture of cryptocurrency to begin with, instead of just seeing massive sell-offs, we may see, intelligent investors going for more intelligent forms of custody. So, that's the type of thing that we need to keep our eye out for. Hacks and then regulatory issues, right? How are governments going to respond to the fact that we have massive adoption on the way? Now, maybe I'm being a little bit, bullish and unrealistic about these things, but I think this shouldn't be as much of an issue, to be honest. Just because if BlackRock is getting in and Goldman Sachs is getting in, these are the people that, not that I agree with the lobbying system, not that I agree with the lobbying system at all, but these are the people that have an unreasonable, ungodly amount of money to lobby the government and change these things. A lot of these politicians are essentially in their pockets. And this might be one of the few times in all of history where lobbying and the amount of power that we've given to banks could potentially work in our favor. If you're in crypto, this might finally come and work in your favor for once in your life. It probably won't happen ever again, but it might happen this time. Because if we want crypto and banks are getting large amounts of money into the crypto services, and they're the ones that are wanting to get in between us and our crypto, they may well use their lobbying influence to help us with the regulatory issues, thinking that they're helping themselves. Although, if we're paying attention, we know that really we plan on phasing out the banking system. Like, the whole point of the crypto in this, like a large chunk of our purpose, is essentially to be like, we don't need these banks anymore. I no longer hold any stock in any bank, okay? Because I just thought about it and I was like, they're not going to be around in the future. We're not going to need them. If you hold crypto and you understand what's going on with it, why would you hold a bank long term? It doesn't make any sense to me. But that's the deal. I mean, we have things going on right now that potentially would have started an extended bull market or crypto winter in the past. I think there's many, many factors that contribute to the fact that we have not seen them trigger a crypto winter just yet. Which is not necessarily to mean that they won't, but I doubt that they will, just because of the amount of adoption and the increased amount of education. And I'm at least in the near to mid-term, and forget that, near term and long term, bullish, very bullish. Mid-term, we'll see what happens. Whether in maybe Q2 2022 we go into a bear market, Whether we stay in that bear market, we'll have to see. But the extended and super cycle theories are definitely in play, because what's going on now and all the level of adoption and all the stuff that's going on is completely different from anything that we had before. Our retail on-ramps, our ability to FOMO in as a mass in population is beyond anything that we had in any previous bull run. It's easy to get crypto now. It's advertised all over the place. Things like Gemini and Crypto.com, they're all over the place. It's accessible. If you make a Coinbase account, you can start buying Bitcoin in 5 minutes. It's easy. Once people start going into the FOMO phase of this, possibly when we see 6-digit Bitcoin, we could see unprecedented rises in price action. So stay tuned for that, I guess.